All right. Hi, everyone. Now, welcome to my ACCA PM Intensive Revision course. And what we get to see right now, of course, is to have a look at the very first part of our syllabus. And that is under the modern MA technique. And the first part itself that you get to see is on the activity-based costing. Now, always remember, there are four main parts in these modern MA techniques. If you wish to know more, let me just tell you now. The first is on the ABC. We're going to look into these shortly. Number two, it's when we are here to look into the target costing. Now, of course, following by life cycle costing, which I would combine with the area to do with EMA, or the Environmental Management Accounting. And of course, lastly, it's when we are looking into the throughput accounting. All right, so that's what we are going to look into shortly, and it's part of our part one of the syllabus. Now, bear in mind, later when we are looking at the question, now we know that these area, the questions normally come out in either section A or section B. But most of the time that it comes out in section B, as it was previously discussed and even explained in my introduction of the PM video, that if it comes out in section B, most of the time that would be to do with the OT case study. All right, so we're going to see these shortly, but for now, what I'm going to do is to explain to you what is activity-based costing. All right, that's a good one. Now, ladies and gentlemen, always remember, when we are looking at this ABC, it's very much to do with overhead cost analysis. All right, so that's what we expect to see here. But of course, I believe some of you may be asking a question and say, Steffi, can I just check with you if it's things to do with traditional overhead cost analysis? Now, it's that different from ABC. Yes, of course, it makes some difference. For example, now we find that in the conventional overhead cost analysis method, that is very much based on volume basis or production related basis, such as the use of the factory floor basis, like the machine hours, the direct labor hours. All right, so it's very much production or volume related. But however, when we are looking at activity-based costing to analyze all the overhead costs, I repeat, that refers to the production and the non-production overhead cost. As we can see the word activity, that simply means we analyze the cost using activity. So as a result, you could see because of the activity, it comes out with the cost. So in a way, we find that it drives the cost right here. Now, so some students may be asking, now Steffi, when you mention drive the cost, what does it indicate? Now let me just quote you an example. Now let's say one of the key activities in the business is the setup activity. Therefore, these will give rise to the setup cost. Can you see that? So therefore, we know that in a way, because of the setup, then the cost arises. And not to forget, the higher is the activity rate, the higher is the cost. Now, so if you think in this way, for most of the businesses, we're talking about to maximize the profit. And therefore, we are here to reduce the cost and to push up the profit. Can you see the point? So as a result, the later we know whatever cost that we analyze here under the use of ABC will create an impact on the business profit. All right, but of course, before the profit, there's another part of the impact that's going to be on the pricing. All right, so we'll see that shortly. Now, so let us just have a look at these. The first point, the traditional approach to the fixed overhead cost absorption. Now, it's always simple to calculate and apply. Now, that's to do with conventional or traditional approach. However, simplicity does not justify the production and the use of info that might be wrong or misleading. Okay, now, so why do they come out with the word wrong or misleading? Now, try to remember that's because with the use of traditional method, they restrict the basis to the factory floor basis, as I mentioned earlier. So therefore, it is unlike the ABC. ABC by itself, they analyze now areas to do with non-production activities as well, such as the inspection, the setup cost, all right, some material mishandling, or I would say the material handling cost. These are the example for it. So it covers a wider scope as compared to traditional. Now, because of these, we believe that the use of ABC will lead or result in a more accurate assessment or the analysis of the overhead cost. All right, so here comes the second point. Now, the activity-based costing undoubtedly requires an organization to spend time and effort now in investigating more fully what causes it to incur the cost. Now, I would say the causes to the cost, the causes is what we call as the cost driver. So it's mainly because of the cost driver. Here comes the cost, and that's the cost pool. Can you see that? Now, so let me just relate these right here. For example, your setup activity leads to setup cost. So setup activity, that's the cost driver. You see that? Number two. Now, we believe that when you're looking at the setup cost, that's the cost pool. So we always believe that because of the activity, it's given rise to the cost. So is it possible for the business to analyze every single activity? The answer is no. They can only analyze the key activities. And that's what we have to bear in mind. And it will still be seen as a form of limitation for activity-based costing. Now, so we say, now to use that detailed information for costing purposes, but understanding the drivers of the cost must be an essential part of the good performance management. Now, why? Because we believe by understanding the causes, you may control the cost. So by the time we say control the cost means if you find that there is any of the unnecessary cost, we can anytime cut the cost. All right, so to make the price more competitive. Now, because we believe that it affects the pricing. Okay, so now, so some students probably ask question. They say, Stephy, can I just chat with you? Do you think that because of the use of these ABC would help in improve the profit? I would say, yes, it improved the profit of the individual product, but not the total profit of the company. Because we find that the use of ABC, they only change the way of allocating the overhead cost to different types of the product. But when it comes to the total overhead cost, it still remained at the point of the allocation as compared to the traditional method. All right, so that's a very important point, as you can see. Now, so let's have a look at the third point here, which it tells us about the processes. Okay, that's important. So we always find that, number one, if you go for the activity-based costing, the process, as you can see from here, number one, split the fixed overhead cost into activities. And that's what we call as the cost pool that I mentioned earlier. All right, so it's unlike traditional method. Traditional method, they only consider one total fixed overhead cost. They include everything. All right. But here we're to analyze them into different types of activities. Number 2, for each cost pool, we have to identify what causes that cost. So in the ABC term, this is the cost driver, as we mentioned. But it might be better to think of as the cost causer. All right, so let me just code you some simple examples again. Number 1, if it is a form of the setup cost, and I believe that in this case, now the number of production runs or the number of setups in a way would be the cost driver. All right, now if you get to see, say for example, the inspection cost, and that's normally to apply back the number of inspections. So when you look at the question, it's very obvious that they provide you all these cost drivers, and what you have to do is to select and match them back, all right, accordingly. Now, but of course, we do see some of the costs such as like machine-related costs, say for example, then we know in a way, in that case, these would then be seen as what? Now, these would then, in a way, be seen as matching back to the cost drivers such as like the machine hours. All right, so any machine running costs, machine related costs, that's normally how we match back. Okay, calculate the cost per unit of the cost driver. Now that's the cost pool over the number of cost drivers. So you know what we call this? If you take cost pool, divide by cost driver, and that's what we call as the cost driver rate, and to be absorbed back into the product, and that's a CDR. Now we're trying to allocate the cost to the product based on how much the product uses of that cost driver. You see that? So when you allocate the cost, you have to multiply with the activity volume, and we'll get to see that shortly. Okay, so conclusively, we can make a comparison, the formula right here for the first and the second part. For instance, if it's under the traditional method, we have step 1. Now, they will calculate something called the OAR. That's the overhead cost absorption rate. All right, so in which we are making use of one total overhead cost to divide by the budgeted base. As you can see, in the exam question itself, it could be the labor hour. On top of that, sometimes in exam, they probably need us to make use of the machine hour. So it depends on which one they will provide you. And of course, this is what we call to allocate the overhead cost, which you absorb. So when you absorb it, we find that that's when you use the budgeted OAR and multiply by the actual base for your information, all right, that you get to see. Now, so if you are here looking into these budgeted OAR multiplied by the actual base, now remember, the higher is the base, and of course, we find that the higher is the total overhead cost that you can see. All right, so in a way, we find that from here, what is more important is to make a comparison with ABC method. All right, so we have just mentioned. Now, in terms of complexity, of course, that would be ABC. Now, in terms of reliability, once again, it's ABC, especially for product costing and pricing. Now, so we have to go for the 2 different steps again. Now, let's see which are the 2. The first one is the CDR, the cost driver rate. So for this cost driver rate, we are taking this cost pool, divide by the cost driver. Okay, I think I mentioned it for more than twice just now, yeah? So it's not a problem. Okay, step 2. Step 2, when we absorb. So this one, I would like to highlight on this area a little bit here. We're taking the CDR and multiply by the activity consumed. So this is what we would expect to see. Now, say for instance, you have calculated the figure cost per setup, and of course what you have to do when you multiply by the activity consumed, this is when you're here to multiply by the number of setups. Can you see that? All right, so this is the one that you must remember. Now, of course, the higher is the number of setup, then we believe the higher is the setup cost that you charge or allocate back to the product. Okay, now, so they are applying the same concept like absorption, but again, the first was without further analysis into different types of activities, but ABC, it does. Okay, now, so we would expect to see how all these will affect us later, especially in calculating the figures such as like the overhead cost based on either total or per unit. Okay, now, since this is the intensive revision course, which we expect the students have got some basic level of the knowledge for this area, and as a result, we have to use the question to demonstrate the skill. Okay. So this is what we will normally advise our candidates. Whenever you have covered on one part, it is always good for us to apply into the questions immediately. All right, so that's what we get to see here. So we're talking about this topic 1.1 for activity-based costing once again. Now, so this is a sample of the OT case study question. So it has got 5 different questions here. So let's have a look at these together. A company manufactures 2 different products, C and D, for which the following information is available. So let's see. Now we have the budgeted production, 2,000, 4,000. All right, so total is given. The labor hour per unit and in total. So let's see. So if you multiply, that is like 10,000 here. And we believe this is 28. So in total, that's how we get a 38,000. Now, number of production runs, that's the cost driver. So in total, we have about 30. Number of inspections is another cost driver during the production, 6 and 4. And this is 10. So this will represent a 60% of the total. And this will be 40% because we're talking about a total of 10. All right. Selling price per unit currently is at 60 as well as 58. Now, remember, we believe that it's possible for us actually to get the profit if we are calculating the overhead cost as well as by the use of the selling price. Okay, right here. So it's always good for us to see and to analyze them one by one later. So it's good for me now to show the cost later on, but for now, let's have a look at the cost pool. Now we have the total production setup cost, and the setup cost currently it's 120, inspection cost and other overhead costs. So we're pretty sure that these are all the cost pool. Can you see that? Right? These are all the cost pool. Now, so we know if let's say it's under traditional method, and in which what we have to do is to get the total overhead cost right here. So let's give it a try and let's see how much is that. All right? Because we say under traditional method, what happened is they will make use of only one total. Okay? But if it's ABC, they follow the number of activities here. So move on. The current overhead cost per unit for each product is traditionally based on the total labor hour. Can you see that? So they mention, if you wish to calculate your OAR, is that possible? Yes. Taking these total overhead costs, and what is your total labor hour? I think that's 38. So that's how you derive at the OAR under the traditional method, and we will normally apply 2 decimal places. and that's like 7.79 per labor hour in this case, and that's the first part. And moving on, however, the company considers the use of ABC method and other overhead costs are absorbed under or on a labor hour basis if it's under ABC use. Okay, so do you know what they're trying to tell you? For example, these are all our cost pool. So if you see production setup cost, you can use number of setup, or you can apply the number of production runs. That's a cost driver. Can you see that? This is a cost driver. So it depends on how many runs right there in order for you to derive at your answer. Number two, the inspection cost obviously will be using these, the total number of inspections. Okay, and number three, under ABC, if it's other overhead costs, we will be using the labor hours. So here you go, that's the 38,000 hours for information. So this is all right. Okay, great. Now, so what we're going to do right now is important to analyze the case one by one with what I have already allocated. It could be under traditional, and at the same time, it could be under the cost driver. That means under the use of ABC. So I'm going to show you one by one right now. We're going to start off with question number one. All right, so let's see. Now, using the conventional or traditional overhead cost analysis, what is the budgeted overhead cost per unit? See this carefully for product C and in 2 decimal places. Okay, that's a good question. We're talking about C. So if you wish to get the cost per unit, that's when we take the OAR, multiply by the actual base. So ask yourself, have we come out with this OAR? Yes, 7.79. You agree? That's per hour. So for product C, we're going to check. Now, what is the labor hour per unit? And that's going to be 5. Isn't that? So if that's the case, this is 5 hours per unit. We're taking these 779 with 5 and given rise to this answer. And that's like 38.95. You got that? Okay, that's great. Now, so you know what you can do? It's you can further analyze the case later on. For example, if let's say we're talking about our cost here, assuming that's the only cost that we have, the budgeted overhead cost per unit. Now this is 38.95. I think that's possible to calculate even for D. If it's D, taking the 7.79 again and to multiply by 7. And let's see what do we get. Now this is in fact a 54.53 per unit if that's under traditional method. All right, so I'm trying to produce and generate more information as possible, as much as possible here, because that would further be used later on in other questions, right? So that's the first part. Now, of course, moving on. Now, using ABC or activity-based costing, now what is the budgeted total inspection cost for product C this time? Again, C. Now, so some students may ask and say, hey, Steffi, do we need to come out with the CDR first and subsequently to multiply with the activities consumed? Now, that's a very good question. Now, I would personally think that if it's possible, what you can do is to use this way, and that will be faster. Check and see. What is your inspection cost right now? 86,000. Can you see that? Right, great. So I'm going to use this $86,000. That's the cost pool. And we're talking about product C. So for product C, we are using the number of inspections. That's like 60%. Can you see that? So if you wish to be quick, instead of taking 6/10, and we can directly using the $86,000 and multiply by 60% will do. All right. So this would give rise to 51,600. Okay. So just bear in mind, whenever we're looking at the exam question, when you see any of the number entry question, bearing in mind when you key in the figures, no comma will be added. All right, no comma is added here, so we can just key in the full amount will do. That's it. All right, so far we are still talking about these product C, and let's have a look at this question number 3. So it says here, now using the activity-based costing, what is the budgeted overhead cost per unit this time for product D? Okay, now, so do you know what we can do here? We can try to allocate the cost immediately. So we have 3, isn't it? The setup cost, the inspection, and other overhead costs. So we can allocate to the individual. All right, so we make it quick to this D directly. So what can you do? The total setup cost 120. If it's for D, the production runs is going to be 18. So you multiply by 18/30. This is the first. The inspection cost, we can just multiply by 40% for D. And other overhead costs, we know that's like 28,000 hours over 38. And you will get a total right here. All right, let's give it a try and to see what do you have here. So it's 120 18/30. This is $72,000. And if you take the 86 with 40%, and we know that's like, this is how you get, using the 86 with 40%, that's like 34,004, and it's not the problem. And of course, lastly, if it's other overhead costs, that's 90,000 with the 28/38. Now, so we guess it's possible for you to get like 66316 to the nearest dollar. All right, so what's the next step right now? The next step right now is to get them added up, and which I believe these total overhead cost 172,716. Okay, it's what you're seeing here, and they want it to be per unit. So if let's say that's based on per unit for this product D, I believe what you have to do is divide by the quantity. All right. Now, so let's have a look at what is the quantity for these D. The quantity, it's going to be a 4,000. Okay. So that's what we're going to do here. Divide by 4,000. All right, that's straightforward. And in which, congratulations, you'll be able to get your answer A. That's 43.18 in this case for your information. All right. Now, so you know what? I think it's anytime easier than those days how you presented your answer in the written based exam question, because those days, like when you were looking at some of the past exam questions where the students were required to present the calculation for the cost driver rate, the CDR, but here you can just go straight directly with the calculation. Can you see that? That's quick. And just to remind you, some students may be asking this question and say, hey Steffi, actually from where I can see the cost driver rate? Now class, do you know if you're taking the 120,000, the cost pool, and when you divide by the cost driver, this by itself will be seen as the CDR. And that's why you multiply back with this activity consumed. All right, so it becomes the final total cost in this case. So we get to know, class, that the first the second and the third part of the question by itself, yes, we have done. So if you ask me, Steffi, do you think that's something very tough or difficult? I would say not really. All right, but make sure that you follow the steps, and I hope you remember. All right, so it's always to go for the absorption right away. So quite straightforward. Okay, great. Now, of course, I think, class, that you have to bear in mind that normally for this OT case study, we will expect to see that in a way, some of the questions will be computational and some will be discursive. All right, so that's what you can see here. Now, so just bear in mind that if you're here to look at these discursive question, now most of the time you will see this kind of question known as the MRQ. So what is MRQ? That's the multiple response question for your information. So you have to make sure you select the right one here, yeah? Now imagine here, the following statements have been made about traditional absorption costing and the activity-based costing. So let's have a look. Now, which of the above statement is or are true? All right, so let's see. Number one. So we're looking at this question number 4, statement number 1 first. Activity-based costing may not be used to set prices for product, but the traditional absorption costing method does. This is a wrong statement. Can we actually use ABC to set the price? Yes, of course. Okay, why do I say so? For instance, when you have got to use this ABC to come up with the cost, and eventually you'll be able to set the price. But the question is, from the cost to the price, it depends. You can either go for, let's say, the profit markup or the profit margin. So it depends on which one you're going for it. Now let's assume if this is a 20% markup, we are going to use this A multiplied by 1.2. That means from the cost represents 100%, we're taking 20% of it, and that's how you get this B, which is the price in this case. All right, so we have the markup, it is 20%. But of course, if it's margin means it bases on the selling price. So the selling price is going to be 100% then for your information. All right, so the cost will be left with the 80%. So what I have to do, it's technically, if let's say this is a margin of 30%, so what we can do, it's in a way to take the cost and to convert back to the price. Say for instance, this cost by itself, let's say this is $15. All right, so the margin is 30%. So cost represent 70%. The price is always 100. So what you can do, let me show you here. You can take 15 over 70 because that based on 70% and convert to the price of the 100. That's what you can do. Or to be quick, mathematically, you can just take the 15 and divide by 0.7. All right, because if you reverse it, so it becomes divide, and that's 20%, it comes back to 100%. And of course, with the use of profit margin to set the price, normally we get to derive that higher price in this case. All right, so straightforward. Okay, so is it possible to set the price using it? The answer is yes. Okay, great. Now, number 2, the use of traditional absorption costing tends to allocate most of the overhead cost to the low volume products, but not to the high volume product. This is another incorrect statement. Now, so with the use of the traditional overhead cost method, because they follow either the machine hour or the labor hour, so it tends to absorb higher overhead cost to the high volume product. So as you can see from this question just now, product D has got 7 hours per unit that they need 7 hours to produce a single unit of the product. So the overhead cost by itself is higher, isn't it? Earlier, can you see that? It was here. Let me just change the highlight color to yellow. It was 7 hours earlier, so the overhead cost is higher than product C just now. All right, so obviously, when they allocate and assign the overhead cost, that's the main problem, as we can see here. Okay, so pretty straightforward. First and second statement seem to be incorrect. And number 3. Now, it will be expensive and time consuming by implementing ABC. What do you think? Yes, this is very true. Now, so when I mentioned it is expensive because by the time you're making use of this ABC when you switch. Now, so you have to get ready for all different types of the software, hardware, because you must have the strong information system, right, to support all the data gathering, processing, analysis, right? So it could be quite time consuming. So because of the switch to a new system, that could probably bring problems such as like employee resistance, right? Where we expect to see that, okay, in a way. Now, so as a result, we find that in the future, if you're going for your APM, now this is something I have to share with you all. That is, we believe that if the switch to ABC lead to quite similar overhead cost per unit as the traditional overhead cost analysis method, then there is no point or pointless for us to switch to ABC. All right, so that's just what you have to remember, because we find that it's always to perform cost-benefit analysis, right, for that. Okay, so what's going to be the answer? So we know that the answer, that's going to be number 3. All right, so I have to go through them one by one, understand the concept, and in our normal class, we have briefed all of you them. And then on top of that, we even practice some of the past exam questions. So therefore, this is important. Okay, great. Now move on. Let's see question number 5. Okay, it says here. Now, which of the following is or are the correct statement? Okay. Now, so we're talking about the switch. So the switch of the traditional method to ABC would lead to a net loss for product C based on the current selling price charge. Okay, so once again, let's analyze DC here. Now, so we can go for traditional or we can go for ABC. We just want to know, assuming if you are taking the price minus the cost, which here we assume that that's the overhead cost, we can see whether that's profit or loss. Okay, so ladies and gentlemen, now what I have to do is to look at the prices. That's going to be like 60 for product C. Okay, great, 60. So regardless of the method, the selling price will still remained, and this is 38.95. Can you see that? All right, great. So now the question is, we just want to know that in this case, right, what is the cost right here? Now we're going to do the same thing, that if you wish to know what's the overhead cost, if it's under ABC for product C, we'll do the same thing here. All right, so I'll perform my answer here. Under ABC, what can we do? Now, so we're going to have set up. The setup is when we take the 120,000 and we say that's with the number of production runs. So this number of production run, that's like 12 over 30. And second one We know this is like 86,000. So inspection by itself, we know we are taking 60%. And number 3, the third one, that's like $90,000. So with this $90,000, we trying to absorb back using the labor hours. I hope you still remember. That's like 10,000 and over 38. All right, so just get a total right here. And don't forget, we can divide that with the quantity. If you still remember, that's like 2,000 units for C, and that's how you get the overhead cost per unit if it's under the ABC. So let's do it now together. So that's the first, and we have these 48,000 for the first, and the next one. And of course, the last category as well. And we have to really make sure we calculate the right figure. This is 123,284 if you add them up. Okay, if you add them up. So we divide by 2 and you'll be able to get the answer of the 61.64. All right, so give it a try, please. If it's the 123,284. Okay, great. So what do you get? If you divide back with C, that's 2,000. All right. So this is in a way 61.64. Okay. So I hope you get the answer here. So we're going to post back right to the next page. Okay. So we're coming back to here. It's quite straightforward, isn't it? Right, so I created the question myself in which I'm trying to bring out more scenario. So it's going to be a profit or loss. That's a good question. Now, price minus overhead cost, this is still a profit. Okay, but if you switch to ABC, you can see that's an increase in the cost. And these will become a net loss. Can you see that? Where the price is lower than the overhead cost. So that's the case. We believe that this is correct. Okay, so the switch of the traditional method to ABC will lead to a net loss of the product C. And in this case, if it's under the current selling price charge. Now, but of course, we do need to understand something. Now, you know, in a way, some students may be asking and say, hey, Steffi, if my cost now is higher under ABC, so what can I do about that? Oh, that's a good question. Now, so some businesses, what they will do here is they are trying to increase the selling price of the product. But bearing in mind, now we find that if you increase the price just like that, these may further affect the business product demand, as the customers may not be willing to absorb such a cost increase. And of course, towards the next part, we'll be able to look at pricing decision. So under pricing decision, that basically tells us that by doing so, what's going to be the impact. Understand? Right? So as a result, considerations must be there in order for us to see how it affects our pricing decision. Okay? Now, so what about looking at the last point here for this activity-based costing? Now, so it says the implication on the pricing for this product D as a result of the switch to ABC may result in possible price increase decision by the business to avoid any possible losses. Okay, so once again, what you can see here, we have to make a comparison again. Again, the price and the overhead cost. So we just want to know that, do you think if they were from traditional to switch to ABC, and these will trigger possible price increase decision? And let's have a look at D. What is their selling price first? Okay, apparently that the selling price is 5854.53. It's the traditional cost. So this is going to be 58. 54.53 was what we calculated earlier. So what about the overhead cost per unit if it's under these ABC? I think we did these just now in question number 3. Am I right? So for product D, the overhead cost per unit, it was 43.18. So let's have a look. 43.18. Okay. Now, ladies and gentlemen, if you're seeing these, you should understand that when you switch to this ABC, what happened? The cost in a way has dropped. So when the cost has dropped, do you think this would trigger any changes to the selling price? I don't think so. With the current $58, they are making better profit than the earlier situation. All right, because the traditional overhead cost itself, it was much higher than this. So I don't see any need for further price increase. In fact, in which what the business may consider, it's a price reduction. Because with the price reduction, we believe that this probably in the future push up the demand if the demand by itself is elastic. Okay, so if you wish to know more about what is elasticity of demand, then stay tuned for one of our videos to do with the pricing strategies. So I would say the correct statement here, that's going to be A in this case. All right? Okay. So I will find that in a way, the use of the ABC is so useful. So of course, some students may be asking and say that, hey Steffi, the use of ABC, is that suitable for the production or manufacturing company as well as service? Which one do you think is suitable to be used? The answer is both. All right, we can apply this for manufacturing business to analyze on the individual product profitability. All right, so that's important. And number 2, we can even apply these for service as well, because by the time you apply these to the service, and bearing in mind, that is when we are here to assess something called the CPA. You probably wish to know what is this CPA all about. Okay, bearing in mind, whenever you look at CPA, that's called the customer profitability analysis. And which means from there, we are able to analyze which service could bring the highest level of the profit, and that's where you will form your plan or your priority, and that's important. Okay, now, so with that, we actually revise on both the theoretical aspect as well as the calculational area, the computational area for activity-based costing. So again, please bear in mind as a summary that we'll find that if, let's say, under traditional and ABC, we'll expect that activity-based costing by itself will be more reliable, coming out with a better product costing and profit result. All right, so with that, we finish off the very first part of our revision on topic 1.1, the activity-based costing. All right, thank you very much.